Good evening everyone, we are the Group 3 to present, illustrate, and discuss the central role of General Ledger System as a hub system that is connected to transaction processing systems through formal information flows, and the financial reporting system as a multi-step activity that begins with the capture of transaction and concludes with the preparation of financial statements.
The first key element of the General Ledger System is a journal voucher. So, what is this? Journal voucher gives us the ability to create journal entries without actually posting them, just by saving them as drafts. This can be used for transactions that require internal approvals or if we just simply want to save the draft while working on the transactions. Routine transactions, adjusting entries, and closing entries are all entered in the General Ledger via journal vouchers. Let us take a look at Figure 6.35. Here, we can see the elements of a journal voucher. There's the financial amounts and the affected General Ledger accounts of the transaction. There is also a journal voucher number assigned for each voucher and the date when the transaction was recorded or its posting date. This is one degree of control that is being imposed by managers to avoid unauthorized General Ledger entries.
The General Ledger System is the heart of an accounting system. It is a record of the balance of each of the accounts of a business. It was developed by following all of the phases of development for a large software system. It tracks all the financial transactions and is used to generate the company's financial statements by summarizing organizations' various financial accounts and transactions. Being the center of accounting management system, General Ledger provides powerful divisional and departmental functions, maintaining journal, log recurring entries, generate audit trails, and create custom financial statements. Through GLS, the entity can control GL account and sub-account structure, define the structure of GL system accounts and sub-accounts, organize reporting and analysis by configuration and by defining segment lengths, and segment values, enhance reporting, create different views of the data or dimensions. Such reporting dimensions are available to slice financial reports by product, department, or any user-defined segment. Consolidated and summarized data can be displayed in monthly, yearly, and quarterly views. Protect data. Control roles and access permission by account and sub-accounts to protect sensitive data and improve accuracy. And lastly, streamline GL consolidation. Combine data from multiple entities for consolidated reporting and analysis. Different currencies or different account structures, adjustment for minority interest, intercompany transfers, and other transactions are preserved to avoid duplication. Figure 6.34 shows the relationship of GLS to other information subsystems. So as you can see, the General Ledger System is a hub connected to other systems of the firm through spokes of information flow, transaction cycles, and process individual events that are recorded in special journals and subsidiary accounts. The summaries of these transactions flow into the GLS and become sources of input for both the financial reporting system and the management reporting system.
Figure 6.36 shows the record layout for a General Ledger master file. It consists of account number, account description, account class, whether it is an asset, liability, revenue, expense, or equity, the normal balance of the account, beginning balance, the total debits and total credits for the periods, and lastly, the total current balance. The General Ledger master file is the principal file in the General Ledger System database. It is based on the organization's published chart of accounts. Each record in the General Ledger master file is either a separate General Ledger account or the control account for a corresponding subsidiary ledger in the transaction processing system. The Financial Reporting System, or FRS, draws upon the General Ledger master file to produce the firm's financial statements. The Management Reporting System or MRS also uses this file to support internal information reporting. The General Ledger History file. It has the same format as the General Ledger Master file, but its primary purpose is to provide historical financial data for comparative financial reports. Next, the Journal Voucher file. It is the total collection of the journal vouchers processed in the current period. This file provides a record of all General Ledger transactions and replaces the traditional General Journal. Next, we have the Journal Voucher History file. It contains journal vouchers for past periods. This historical information supports management's stewardship responsibility to account for resource utilization. Both the current and the historical journal voucher files are important links in the firm's audit trail. Also, we have the Responsibility Center file. It contains the revenues, expenditures, and other resource utilization data for each responsibility center in the organization. The Management Reporting System draws upon this data for input in the preparation of responsibility reports for management. And lastly, we have the Budget Master file. It contains budgeted amounts for revenues, expenditures, and other resources for responsibility centers. These data in conjunction with the Responsibility Center file are the basis for responsibility accounting.
The next topic that I will discuss is about financial reporting system. According to the law, it is the responsibility of the management to provide stewardship information to external parties. This reporting obligation is met via FRS or Financial Reporting System. Much of the information provided takes the form of standard financial statements, tax returns, and documents that are required by regulatory agencies such as Securities and Exchange Commissions. External parties are the primary recipients of financial statement information. These external parties are stockholders, creditors, and government agencies. Generally speaking, outside users of financial information are interested in the performance of organization as a whole. Therefore, they require the information that allows them to observe different trends in performance over time and to make comparison between different organizations. By this, financial reporting information must be prepared in the manner that it is generally accepted and understood by external users.
The next topic is financial reporting procedures. Financial reporting is the final step in the overall accounting process that begins in the transaction cycles. The process begins with a clean slate at the start of a new fiscal year. Only the balance sheet or permanent accounts are carried forward from the previous year. And from this point, these following steps occur. First step, capture the transaction. Within each transaction cycle, transactions are recorded in the appropriate transaction file. Second step, record in special journal. Each transaction is entered into the journal. Recall that frequently occurring classes of transactions such as sales are captured in special journals. Those that occur infrequently are recorded in the general journal or directly on a journal voucher. Third step, post to subsidiary ledger. The details of each transaction are posted to the affected subsidiary accounts. Fourth, post to general ledger. Periodically, journal vouchers summarizing the entries made to the special journals and subsidiary ledgers are prepared and posted to the general ledger accounts. The frequency of updates to the general ledger will be determined by the degree of system integration. Fifth step, prepare the unadjusted trial balance. At the end of the accounting period, the ending balance of each account in the general ledger is placed in a worksheet and evaluated in total for debit-credit equality.
Moving forward to the sixth step of the financial reporting process, making adjusting entries. Adjusting entries are changes to journal entries you've already recorded. Specifically, they make sure that the numbers you have recorded match up to the correct accounting periods. We have 5 types of adjusting entries: the accruals, deferrals, estimates, reevaluation, and error correction. After making adjusting entries, we now journalize and post them to our journal voucher. Journal vouchers for the adjusting entries are prepared. After you record transactions in your journal voucher, it's time to transfer them to your general ledger. To keep your books accurate, post every transactions and adjusting entries from your journal voucher to your general ledger. A sample adjusting entry for the recording accrued expenses posted in a journal voucher can be seen on your screen. After posting them to your general ledger, we can determine the total balances per account after making our adjusting entries. We can now prepare the adjusted trial balance. In simple words, when accounts are prepared at the end of the accounting period, ledger balances are also required to be updated with relevant adjustments, which are results of the partial transaction, improper transaction, and transactions that were skipped. Such type of transactions are deposits, closing stocks, depreciation, and others. Once all necessary adjustments are made, a new second trial balance is prepared to ensure that it is still balanced. This new trial balance is called the adjusted trial balance. After that, we can have our financial statements prepared. These financial statements will help external users such as the stakeholders, government, and investors for the relevant requirements and investing decisions. First off, the balance sheet or the statement of financial position. The balance sheet identifies how assets are funded either with liabilities such as debt or stockholders' equity such as retained earnings or additional paid-in capital. Assets are listed on the balance sheet in order of liquidity, while liabilities are listed in the order in which they will be paid. The second statement is the income statement or the statement of financial performance. Unlike the balance sheet, the income statement covers a range of time, which is a year for annual financial statements and a quarter for quarterly financial statements. The income statement provides an overview of revenues, expenses, net income, and earnings per share. It usually provides 2 to 3 years of data for comparison. The next financial statement to be prepared is the statement of cash flow. The cash flow statement measures how well a company generates cash to pay its debt obligations, fund its operating expenses, and fund investments. The cash flow statement complements the balance sheet and the income statement. The balance sheet, the income statement, and the statement of cash flow are prepared using the adjusted trial balance. Other financial statements, such as the statement of changes in equity and notes to financial statements, are also prepared. The next financial reporting procedure is journalizing and posting closing entries. Journal vouchers are prepared for entries that close out the income statement temporary accounts and transfer the income or loss to retained earnings. Finally, these entries are posted to our general ledger. The last and the final step is the preparation of the post-closing trial balance. A trial balance worksheet containing only the balance sheet accounts may now be prepared to indicate the balances being carried forward to the next accounting period. To further understand the financial reporting process, a flowchart of the procedures can be seen on your screen. The periodic nature of financial reporting in most organizations establishes it as a batch process. Many organizations, however, have moved to real-time GL updates and FRS that produce financial statements on short notice.
There are also potential risks associated in general ledger and financial reporting systems such as improperly prepared journal entries, unposted journal entries, debits not equal to credits, subsidiary not equal to the general ledger control accounts, inappropriate access to the general ledger, poor audit trail, lost or damaged data, and account balances that are wrong because of unauthorized or incorrect journal vouchers. Now let us move on to the advantages and disadvantages of general ledger and financial reporting system using batch processing and sequential files. It is beneficial in terms of control and reporting because journal vouchers can be approved, validated, and balanced prior to the processing system, thus providing summary feedback on transaction activity. On the other hand, inefficiency is at risk because of the production of manual documents which must be entered into the system and filed, and frequent reconciliation must also be taken into account.
General ledger and financial reporting system using database technology. As you can see in the figure 6.38, in the data processing department, the daily transaction processing system application such as sales system, cash receipt system, purchases system, and other transaction processing system create batch totals of transactions on this. At the end of the run, these are processed by an update program against the general ledger master and recorded to the journal voucher file. Then there will be an update on the general ledger using GL master and GL history. Then, the financial reporting group prepares adjusting and closing entries and produce hard copies of adjusted trial balance, financial statements, and post-closing trial balance. The general ledger department produces summary reports, then reviewing the summary reports and finally storing them in the record files. To conclude our report, we examine the general ledger system and the financial reporting system, two operationally interdependent systems that are vital to the economic activities of the organization. We focus on standard GLS procedures and on the files that constitute a GLS database. Then the FRS, we examine how financial information is provided to both external and internal users through a multi-step reporting process.